You're listening to the Valley Current.
Hey, Steve, how have you been?
Hi, Jack. Doing good.
How's it going?
It's going great.
Yeah, you're busy, right?
I am.
When does tax season officially start and end?
For relatively simple purposes, it starts on February 15th and ends about April 15th.
But people are typically filing extensions and moving things out to October, aren't they?
Many of them, especially the more complicated high net worth taxpayers.
Right. So tax season really goes on for a while from February probably through September, October, right?
It does.
So,
My slowest months actually are June, July, and January. But this year, June and July were quite busy because of the floods and extensions.
so June, July, and what was the other one?
And January.
I mean, it's interesting because I think tax planning is more of a 7x24 by 365 thing, right?
Actually, the planning is really November 15th through December 31st. And at that point, we know enough to be useful, and yet we can still make changes before the calendar year ends.
So you're saying the last 60 days of the year you can do a bunch of stuff.
The last 45 days of the year are the planning period. And if we do planning mid-year, we typically have to redo it at the end of the year because numbers have changed too much.
Yeah, I mean, the reason I'm asking these questions is I don't think any of these automation tools that are out there, and there are a lot of them that are automating at least simple tax returns, I don't think they're doing what I would call the calendar tickler activities to try to extract information in a timely fashion the way a human being does it, right?
Automation for tax can really be divided into automation of the low-end market, which is typically the do-it-yourself market. And that consists of relatively small dollar amounts and people who, for whatever reason, don't avail themselves of professional services.
Right. I mean, there have been these companies like H&R Block and I don't know, Tax Freedom or whatever. There's a huge number of franchises that do returns for peanuts, right? Like $100 a return, very low cost.
Indeed.
And they're kind of like typing services, right? They're not really doing more than that, are they?
They're focused on the very low end of the market because the higher end, more sophisticated taxpayers appreciate the concept of representation and the value of not doing it oneself, but actually having the deniability and the quality. High-end automation is all focused on the tools that professionals use in a professional service context. And even there, the value of the time of the professional is extremely high. We're talking about people who bill hundreds of dollars an hour. And so the value of the tool and the automation is not necessarily in the tax strategy component, but the ability to save time for both the professionals and the clients.
Right. So where do you think the line drawing is? Is it if your income is over $50,000 a year, if your income is over $100,000 a year? I mean, where would you draw the line on when people should go to a tax professional versus when people can use these other services?
If there's any complexity or risk, and it's not necessarily income dependent because, for instance, Donald Trump had relatively low taxable income, yet his taxes are a morass.
Which tax returns?
Yes.
He's got like 600 LLCs, right?
I can't imagine the number of pages involved, but I'm sure there's at least 10 feet of paper if you stack up all the pages on top of each other.
Well, didn't they get them as part of the recent production of documents in Congress, end up getting some delivery from his CPAs?
Yes. I'd love to see a photograph of all those pages stacked up.
It must have been boxes and boxes. And I know there was a New York Times article, and I forget what it said, but I think there's probably still going through all this stuff. And it's not like there's any system that you can just put all this data into, like a large language model, and actually get some comprehensive results from, right? I don't think there's any tool. Maybe that's coming. I mean, look, there's lots of tools, and we've been talking about these AI tools for a while, where you can load large volumes of text files and you can get some information that looks like it's summarizing or producing some form of knowledge extraction out of the morass of information. But I don't know if that can happen with the complexity of tax returns of someone like Donald Trump, right?
And perhaps not. Early in my career, I cut my teeth on a large corporate tax controversy. And the taxpayer had over 25 years of back taxes in litigation, and not 80,000 documents, but 80,000 crates of documents. And when we requested crates from Iron Mountain, typically there was a 97% chance the crate would show up and a 3% chance that there'd be some excuse for why the crate was missing. Some of these documents were handwritten graphs from before the advent of spreadsheets. And you had what was called a D-size document that was written in hand with perhaps 15 different colors of pencil to code effectively the spreadsheet. Problem is that when you unfolded these sheets, they would crumble because of the age of the paper.
Right. I mean, 80,000 crates is probably at least 1,000 pages per crate. So that's like 80 million pages, right?
Right.
At least. And so without some scanning in today's world, now maybe back in the day that you were doing, you did it by hand and you literally went through item by item. I mean, we all know that sooner or later, if this is presented to a judge or juries, particularly a jury, it has to be at some level of a summary. They're not going to take back into the jury room, and the judge is not going to take back into chambers 80 million pages or 80,000 crates or even 80,000 pages. Even 8,000 pages is a large record. Like in the appellate work I do, typical record is maybe 1,000 pages, and a lot of appellate judges don't like that. They think that most appellate records can be reduced to maybe a couple hundred pages of really, really relevant items. And a little bit like there's just too much information to absorb, which is why all these experts exist and all these expert witnesses exist to sort of summarize and provide some easy mental models and opinions for what does this data mean? Because you could look at the data and still not understand what does it actually mean. I mean, what we gather from Trump, just to finish this point, is he uses real estate in a way to keep his taxes low, but he pumps up the value of the real estate when he wants to get loans for banks. So he takes kind of a dualistic position, right? He takes one position in front of the bank, takes a different position for tax purposes. He's broke from tax purposes. Nothing is really making any money. And from lending purposes, hey, I've got a great piece of real estate. It's producing great cash flow. It's a wonderful asset that you should treat as good collateral, right? That's the game.
there's some legitimacy. There may be some manipulation in what you just described, but there is some legitimate basis because the tax law involves recognition of income when a property is sold, whereas a lender typically would want to consider the economic value of the ability to repay. So they're using two different measures to value his ability to repay his wealth. And, I always say that when somebody asks, what is your income? That's a very complex and subjective question. There's, how do you want to measure it?
Well, yeah, in the simple case that you're giving of people that do it themselves with something like, what is it called? Tax Cut is one of the tools that are available online. There's a bunch of free ones that are available online as well. But it's typically someone that's a wage earner that gets a W-2 statement, and they don't really have much in the way of deduction. So it's a really simple return. It almost could be done on a postcard or maybe 2 pages, right?
You say that it's even free, but that disregards the value of the time you spend. And right. If your time is worthless, then yes, it's free. So,
right. No, I agree. And I'm not arguing that people should do their own taxes. I think that's a fool's errand. And, you can make mistakes. You mentioned deniability. That's an interesting concept. Obviously, you're relying on judgments of professionals of what they think is the right approach. I mean, you're not a tax expert. Very few of us are. Maybe people who are tax experts do their own taxes. I imagine you as a tax expert do your own taxes, although you might say, or someone might say, you'd be better off having a third party do your taxes because you might get some insights for something that you'd miss, right?
Certainly having an intermediary lends more credibility to the tax return. For example, if I am applying for a loan, as in the example that you gave, then having another CPA signature on the tax return gives it more credibility than if my signature is the only tax return on it. So, and then there's the time savings,
right?
And the peace of mind of knowing that more than one professional has looked at the tax return.
When you do your own tax planning, are you sure that you go through the detailed checklists that you do for clients? Because, sometimes the shoemaker doesn't take care of his own shoes, right? That's an old saying.
Well, I'll tell you this, my tax returns are quite a bit simpler than many of my clients.
Right.
And so, yes, it's possible that I miss things if to the extent that I do my own tax work, but the amount of money at stake is much lower than for some of my high net worth clients.
But I have to tell you, I think if you were to do a survey of even college educated individuals or couples or households, whatever you want to define, and you went down some basic stuff like, do you have a 529 plan for yourself, which is a way to put educational money away in a tax deferred or tax neutral or tax avoidance? I don't know the right way to say it, but there's no taxes on whatever investments are in that 529 plan that are producing wealth, but the wealth can only be used for educational purposes and then a few other exceptions that you know better than I do. But I think most people would say, what's a 529 plan? I don't think they would know one way or the other, but that should almost be like a checklist item, right?
Well, that actually is an interesting example. It turns out to be a multi-state issue because California, where I practice, is not particularly friendly to 529 plans. So if you surveyed the parents of students here in California, you probably would get the results that you mentioned, where a fair number don't even know what a 529 means.
Right, but federally, it's a good thing, right? I mean, federally, it's saving on whatever those gains are over time.
Well, You can also use other investment vehicles that are more favored by California. On the other hand, in Florida, one of the states where you practice, perhaps 529s are more popular and better known and respected.
Right. But can't Californians get 529 plans that are implemented outside of California?
We can, but the California conformity is lacking, and that makes the overall rate of return perhaps inferior to some other investment vehicles that can be used for college planning.
Okay, so let me just ask a question on that. If your 529 plan has a gain and you're a California citizen, but you bought the 529 plan in Florida or wherever you bought it, you're not going to pay federal tax on that gain, but do you have to pay California state tax on that gain?
That's correct.
How do you get the reporting? Because I'm not even sure the 529 plan puts out that report, does it?
I don't do enough of these in California to have the details on the tip of my tongue. Again, it's not favored by California, and most of my clients in California do not have 529 plans.
Well, that's a stupid thing, because we know colleges and universities in California are pretty expensive. And, it seems like California should be in favor of people saving and having 529 type plans for their kids and grandkids to be able to afford colleges and universities. Stanford's certainly not getting any cheaper, nor is even the state system, the University of California system, getting.
Well, on the good side, California has no death tax,
right,
as some other states do,
right.
And then there's the weather.
So I'm just saying that there's like an array of things that are baked into the tax code that typically people don't even know about. Like, I don't think you would be told about it if you use some automated tool. I don't think there would be a checklist that would pop up from the automated tool to say, have you thought of this? Have you thought of that? Have you thought of the other thing, right?
We do have checklists, yes. And we do have tax planning components to our tools, and their quality, it varies. I think tax planning is probably one of the weakest areas in the ability of a tax professional to provide services. And oftentimes there are specialized companies in the tax planning field that each of them focus on various tricks. So, for instance, there's tax planning companies that focus only on life insurance and related schemes. There's other companies that focus on solar energy credits and solar energy partnerships and nothing else. And I can think of about 20 of these areas. There's firms that specialize in charitable grants and environmental donations and the valuation of donated golf courses.
Right. So, but what I'm driving at is, if you look at all this AI automation that's supposed to put professionals out of business, it's hard to imagine that that's actually going to apply in areas where there's so much interaction between the planning function, the goals of the household or the goals of the individual taxpayer. The automation tool just can't extract enough knowledge. I even look at my own life and say, I don't even know that I could possibly type enough information into the system for it to even have the beginning of an understanding of, well, what are your goals, and when do you want to retire, and what kind of nest egg do you want when you retire, and what are the available choices of investments that you like to make or that you are risk tolerant to? Like, there's just so many questions. And I don't know that there will ever be a tool that will be able to extract enough information to really formulate some automated version of a plan. But I know that there are a number of fintech companies that are working on this very problem and think that they can make it work, and think they can create a mass merchandised version of an online system that can extract enough knowledge to produce recommended investments, to automate the investments, to generate the tax returns, to generate the financial statements. I mean, all of these functions that people like you go to school for many years and take many exams and pass many certifications, somehow is going to be encapsulated into some online system that you're going to pay a monthly subscription fee to.
I go back to my opening comment that the H&R Blocks of the world and the completely automated systems that market directly to the taxpayer are focused on the low end of the tax compliance problem, and that the high end needs to go through tax professionals like me. And,
right. But let's ask the question: is that always going to be the way it is, or is the evolution such that H&R Block and others, there's like 10 or 15 of these franchises, they're all over the place. They have storefronts all over the place. They do all kinds of advertising. Are they going to creep up and try to capture more and more of the market? Or are they just going to stay in their swim lane and say, look, if you've got more than just a, W-2 and maybe a mortgage statement or something like that, forget it. If you have an LLC, if you have a partnership, if you have 1099 income, if you have a bunch of other stuff, forget it. We can't touch it. Like I'd be interested in where they draw the lines, where they sort of say to people, it's just too complicated. Is there some rule or regulation in place in the profession where they have to draw a line and say, look, I can't help you with this?
There is, unless they have licenses, then they would have to say, well, we don't give tax advice. We're just programmers. And if they claim to give tax advice and they get it wrong, they've assumed a level of liability and malpractice because they are not tax professionals.
But is that the risk? In other words, is the risk basically just a malpractice risk, or is there some other risk?
There are other risks, absolutely. One of which is that I can hire a tax professional who's based in Bangalore, India, for $10 an hour. So there's an even lower end of tax services that's potentially undercutting the H&R Blocks of the world. It's quite possible that at some point the Intuits and H&R Blocks are going to be facing competitions from these overseas companies.
Right. So let's just look quickly. If we go to H&R Block, and this is not pre-scripted, we do this all in real time. We're talking about automation. We're talking about potential AI automation. Here's H&R Block saying they've got something called Block Advisors for providing small business tax expertise you need. Now, this is kind of a lead generator, right, to individual professionals that are small business certified and that are going to help someone with an S Corp or a C Corp or a partnership file with a tax pro starting at $220, file on your own for $115. You can meet in person or virtually, 12 years average experience, year-on tax support. I mean, this is a very low price if it really is $220. And it's a really low price if it really is $115, right?
These low-end solutions do not really compete with me because people do their taxes through these systems and then they get it wrong and they get audited and then they come to me to fix the mess. So I'm happy to see potential clients who maybe have too simple a situation to warrant my participation to go to a solution like this. And this is a valuable piece of the marketplace, but it's, again, at the lower end versus having professionals with more substantial licenses and more substantial experience looking at the problem.
What do you, just generally speaking, when you see people that come in saying, hey, H&R Block quoted me $500, if they even give a quote, I don't know if they do or not. What do you say to people that are that kind of price sensitive that they're actually telling you. H&R Block said they can do this with a tax professional, right?
That's great. That's great. And I do not compete myself. I do not compete on price. I compete on value. And I say, go look at the testimonials that our clients have given us and their descriptions of the problems that we fixed, and then make a decision. And it's quite likely that H&R Block may be a better fit for you. In fact, if you show us your tax return and we think that we're not a good fit and H&R Block might be a better fit, we'll tell you to use them, not to use us.
Right. And we're using H&R Block in kind of a generic way because there's like 10 or 20 of these franchises. That's typically what they are, right? Typically, these are kind of trademark based websites now, franchise operators that have a bunch of independent people that are paying a franchise fee for the lead generation and the various systems that are in place, right? I mean, that's
Indeed.
Who's the other one, the other big one that's out there besides H&R Block?
Liberty Tax comes to mind.
Liberty Tax, right?
Yeah. There's a few others out there.
I mean, it's interesting that the first thing the thing comes up is if you're looking for a job, become a tax expert, and they're selling tax school courses, and you can go to work for them, presumably if you pass the course, right? I mean, that's their opening page. They just want to get people who will presumably do the work. I mean, that must mean that they have enough clients to spread around, right? If you think about it.
The tax law changes each year, and it always becomes more complicated, not less complicated. And a lot of tax accountants have been retiring, and then their client base needs to scramble to find somebody who's still in business who has the competency to handle their needs.
What's the typical retirement age for a tax professional in your field? What would you say that is?
It varies a lot based on the person's health. So I've seen people who close down at 60 or 70, and I know people who are still doing tax preparation at 90.
Really?
Yes.
90 years old?
Stay tuned for part 2 of this episode of the Valley Current.